Have you ever looked at a massive brand, like Apple, or maybe even just your local supermarket chain, and wondered why they're all called a company? What even is a company? And why did we have to invent this idea in the first place? Well, let's break it all down.
It really all begins with a simple question, just like this one. You see a local shop that's doing really well and you think, hey, what's stopping it from becoming a global empire? Yeah, my uncle's the best baker in town. I bet he is. But the answer to your question, well, it lies in what we call the problem of growth.
To go from one fantastic bakery to 1,000 bakeries all over the country, your uncle would need a staggering amount of money. Think about it. New ovens, a whole fleet of delivery trucks, hundreds of new staff members. It's too much for one person to handle. And this exact challenge, this wall that every growing business eventually hits, it led to one of the most brilliant inventions of the human mind.
And what was that solution? You guessed it, the company. It's a legal invention, designed from the ground up to solve the very limits that a single person faces. But trust me, it's so much more than just a bigger group of people.
Okay, here's the really critical part. A company is formed and incorporated under law. This isn't just some handshake agreement between friends. No, this is a creation of the law itself. And once it's created, it becomes its own legal person, totally separate from the people who own it.
Whoa, an artificial being? So what, it's like a ghost or something? Ha! In a way, yeah. Like Justice Marshall said, you can't see it, you can't touch it, but in the eyes of the law, it is very, very real. This being can own property, it can sign contracts, and it can even go to court all by itself. It's an incredibly powerful idea.
And because it's this special artificial person, a company gets some pretty incredible abilities. I actually like to call them superpowers, and these are what make it the perfect vehicle for huge business dreams.
These are its main powers. Each one of them solves a really big problem that stops a small shop from becoming a giant corporation. So let's see how each of these works.
So, you're saying if the company gets into some kind of trouble, the owners are safe. In a lot of ways, yes. The business is its own legal entity. If someone has a problem with the business, they sue the company, not the individual people who own shares in it. That separation is absolutely crucial.
So, wait, it can't die? Exactly! Think about it. A partnership might have to end if one of the partners leaves or passes away, but a company, in theory, can live forever. The shareholders, the employees, they might come and go over decades, even centuries, but the company itself just keeps on going. All right, now for what might just be the most attractive superpower of them all, limited liability. Is that what the shield is? What's it do? It means that if you invest in a company, the absolute most you can possibly lose is the money you put in. So if the business fails and owes millions of dollars, creditors can't come after your personal house or your car. Your personal risk is limited. It's a game changer.
Okay, sir, but are all companies the same then? That is an excellent question. And the answer is no, not at all. The law has actually created different types of companies to suit all sorts of different needs.
The two big categories you'll hear about are private and public companies. So, let's say you want to keep control of your business among a small group of people. You'd form a private company. But if you need to raise huge amounts of money from basically anyone and everyone, you go public and list your company's shares on a stock exchange for the whole world to buy.
And the list just keeps going. There are special companies designed for a single entrepreneur, there are companies where the government is the main owner, and of course, companies that operate all across the globe. Each one plays by its own set of rules.
Okay, so we've got these huge, complicated things called companies. But how do we actually know if one is successful? I mean, we can't just walk in and ask the owner how things are going like I can with my uncle's shop.
That is the perfect point, and that's where the law steps in again. You see, companies are legally required to publish regular reports. We call them financial statements. They're designed to give a true and fair view of everything that's happening inside the business. You can think of it like a detailed medical checkup for the company.
This full checkup includes several key documents, and each one tells a different part of the story. But for today, we're going to focus on the big one, the real foundation of financial reporting, the balance sheet. Probably the best way to understand the difference is with this analogy. A profit and loss statement is like a video. It shows you all the action, all the sales and expenses over a whole year. But a balance sheet? That's a snapshot. It's a financial photograph of the company on one single specific day.
So let's take a look inside that financial photo. You'll see it has two sides that, by law, must always be equal. They have to balance. But why? Why do they have to balance? That's a great question. It's because everything a company owns on one side had to be paid for by a source of money from the other side. They're just two different ways of looking at the very same business.
The asset side is pretty straightforward. It's a list of everything valuable the company owns. We're talking about its factories, its equipment, all the products sitting in its warehouses, and of course, the cash it has in the bank.
And this other side, it shows where the money came from to get all those assets. Liabilities are what the company owes to outsiders, like a loan from a bank. And equity is what it owes to its owners, the shareholders. So what it owns must equal what it owes, a perfect balance.
All right, let's put this all together. So, I needed a way to grow my little shop, and the company is the legal tool to do it. That's right, and it has superpowers like limited liability. And we use financial statements like the balance sheet to show everyone exactly how healthy we are.
And that leads us to one final thought. We've seen what a company is made of on paper, its assets and its debts. But what is it, beyond just those numbers, that truly makes one company more valuable than another? That's something for you to think about.